As you are aware, barely 2 weeks ago, the MPC held its 126th meeting, during which, as usual, we reviewed the recent economic developments, and we also assessed the outlook for growth and inflation going forward. The good news is that the data is encouraging. Things are looking very, very good. Inflation has continued its remarkable downward path. As you are aware, it has fallen to 9.4% as at end of September. And this is the 9th consecutive month of decline that we have seen this year. And remarkably, the first return to single digits in 4 years. Food inflation dropped sharply, which was a good one, while non-food inflation also eased. So the decline has been balanced. These trends reflect the impact of our consistent monetary policy, our prudent liquidity management, and of course, fiscal consolidation to emphasize. The growth momentum is equally strong. This is evident in the latest data from the Ghana Statistical Service, which has showed that the economy expanded by 6.3% in the second quarter of 2025, with non-oil GDP alone growing by 7.8%. And that is really remarkable for non-oil GDP to pick up that much. This was driven largely by the services sector, where your industry is located, and of course, agriculture, which is heartwarming. Our composite index of economic activity that we use to monitor economic growth indicated a growth of 6.1% in July, which also signaled continued expansion in domestic demand and production. Externally, the picture is even more robust. The country recorded a trade surplus of 6.2 billion in the first 8 months of this year, while international reserves reached 10.7 billion, which is equivalent to 4.5 months of import cover. The cedi has appreciated by 21% year to date, regardless of some of the things that we have heard. It is still in the appreciation mode, placing it among the best performing currencies taken globally. This performance underscores the growing credibility of our policy framework and the renewed confidence of the markets. On the monetary policy decision and the outlook itself, on the back of this progress and in order to support the disinflation process while nurturing growth, the MPC voted to lower the policy rate by 350 basis points to 21.5%. This is the third rate cut in 2025, and this reflects confidence that inflation will remain within the medium-term target band of 8 plus and minus 2% by the end of the fourth quarter. We are mindful, however, of potential risks going forward, and you're talking about risks including global oil price volatility. There are risks to do with possible tariff adjustments, and then there are other risks that we have to consider, such as any uptick in the rate of in the movements of the cedi. But we stand ready to act decisively, whatever happens, to safeguard stability. The easing in policy rates has already started to transmit through the financial system, and we are seeing signs of that. Treasury bill rates have declined from 13.4% in July to 10.3% in August. And average lending rates are down from 26.6% to 24.2%. We expect further improvement as banks realign their pricing models to reflect the easing stance. Now, let me also commend the banking industry. where you belong for maintaining strong performance and resilience. We've seen the capital adequacy ratio rose to 17.7%, while NPLs have improved to 20.8%, although still elevated and requiring sustained vigilance. In this regard, the Bank of Ghana has introduced a number of new directives, as you are aware, to strengthen prudential oversight and risk management. Examples of these include the Bank Assurance Directive that we issued recently, the Large Exposures Directive, and the guidelines on credit concentration risk management. We have also extended the transition period for the outsourcing directive to end at the end of December 2025, following consultations with the Ghana Association of Bankers. I want to emphasize, colleagues, that this will be the final extension, and banks must ensure full compliance thereafter. Now, looking ahead, the bank will issue new exposure drafts in a number of areas, such as liquidity risk management, interest rate risk in the banking book, stress testing, and also recovery planning. We'll be in touch with you on these shortly. These are part of a broader framework to align Ghana's banking supervision with international best practices. So, colleagues, as we celebrate these gains, let me stress that the task of consolidating stability is a shared one. Sustaining a stable exchange rate, or deepening credit to productive sectors, and expanding exports. These require close collaboration between the Bank of Ghana and the banking industry. I want to encourage all banks to design and promote export-oriented financial products. I want to encourage them to support SMEs and agribusiness, and I want to encourage them to work with us to enhance FX sourcing through formal channels. And in the same spirit, I want to urge banks to adhere to domestic regulatory provisions. I want to emphasize that please adhere to our regulatory provisions. Now, a number of areas to emphasize: the use of local insurance companies for import coverage. That's one issue that has come up strongly to help reduce foreign exchange leakages and build local liquidity. We also expect banks to take active steps toward public listing. And this is a new one that we are discussing. We had a good meeting with the Ghana Stock Exchange this morning. A couple of banks have given us positive signals about their readiness to start this process towards listing. This will enhance capital strength, this will enhance transparency, and this will promote long-term growth prospects. So in conclusion, colleagues, the return to single-digit inflation is here, and it marks a new chapter in our economic recovery. But it is not the end of the story at all. Our collective responsibility now is to sustain this discipline. We have to strengthen the financial system further, and we have to ensure that stability translates into jobs, translates into affordable credit, and translates into real growth for households and businesses. For us at the Bank of Ghana, we'll continue to work closely with all of you to achieve these goals through open dialogue, consistent regulation, and of course, a shared purpose.